there. Welcome to Morning Markets. I'm Lindsay Biscaya. Here are some of the stories that we're tracking for you in the BNN Bloomberg newsroom today. Shares of ATS are trading higher today. The technology company saw third quarter profit that beat expectations. Growth was mostly driven by a 13% rise in revenue across all markets except for transportation and a boost from foreign exchange translation. Looking ahead, the company expects its order backlog to help mitigate the impact of variability in bookings on revenue in the short term. And shares of Brookfield are climbing today. The Toronto-based company posted record fourth quarter and full year results driven by strong fundraising and capital deployment. The asset management company had increased its quarterly dividend by 15%. The board of directors also approved the appointment of Connor Teskey as the new CEO. He will replace Bruce Flatt. And shares of Advanced Micro Devices are falling sharply today. The chip maker's sales forecast underwhelmed investors, which is a sign that it's not making the AI inroads that some on Wall Street anticipated. AMD is contending with U.S. restrictions on what it can export to China, the world's biggest market for chips. U.S. President Donald Trump has moved to relax the curbs, but it has taken time to get the necessary licenses. And Toys R Us Canada is seeking creditor protection as it faces multiple lawsuits from unpaid suppliers and landlords. In the meantime, the retailer will evaluate its strategic alternatives and implement certain restructuring initiatives. This includes reducing its retail footprint to better position the company for today's retail environment. We'll take a quick look at the markets here, starting with the TSX up ever so slightly this morning. We'll continue to monitor that. Of course, gold prices have been booming today, which should bring the TSX up a little bit more throughout the day. If we take a look at U.S. markets in the meantime. Mixed trading today for the S&P 500, Dow Jones, and the NASDAQ Composite, all, of course, recovering after a bit of a blip yesterday, thanks to Anthropic introducing that new AI tool, which caused markets to sink. Gold rebounded above $5,000 an ounce as bargain hunters chased precious metals after a historic collapse from last week's record highs over 5,500. Let's get more on this from Tony Ciro, Vice President and Senior Portfolio Manager at Caldwell Securities. It's good to have you join us. Thanks so much.
Good morning, Lindsay. How are you?
I'm good. I hope you're good as well. Okay, so
I am.
Good. Gold up today. I'm wondering, is this a case of investors kind of buying in the dip? What do you think?
Well, we saw gold pull back last week in about 10 to 13% on the announcement of Trump's recommended choice for next Fed chairman, Kevin Warsh. And apparently he's more hawkish. He wants to strengthen the U.S. dollar. He was against the quantitative easing program back to settle with the financial crisis. So a little bit more bullish kind of mentality. And that weighed in on investors thinking that as the U.S. dollar declined, the price of gold had appreciated. But going forward, if the U.S. dollar increases because interest rates are going higher, then maybe the price of gold was overvalued. I think some of those fears have been subsided. We're still believers in gold, even at these levels. We're seeing a nice rebound there. Long term, we do believe the U.S. dollar will weaken and that the gold price will continue to appreciate.
What's interesting, though, data compiled by Bloomberg today is showing that gold has become more volatile than Bitcoin. The 30-day volatility climbing above 44%. You're nodding your head. You knew that. So we're still going to see volatility, though, probably throughout the year. Do you think?
Yes, and volatility creates great buying opportunities. If you have a position or a firm stance that an asset will appreciate given the reasons behind it, then when you see a dip in price, there becomes a good buying opportunity. Again, long-term forecast, at least on our end, is we think gold will appreciate because the U.S. will continue to look to weaken its currency, and that will be a good driver for gold. As a side, Bitcoin, though, the volatility in there, I think at the height, it was 125,000 last year. We're seeing it settling around 75,000 now. Bitcoin is more geopolitical driven risks. And as soon as you see a risk-off environment, your riskiest assets will be sold first. So whoever holds Bitcoin, those are probably the first things to go down. And we're seeing a little bit more geopolitical tension out there, in particular Greenland, what's happening in Venezuela. So these are giving some potential investors in Bitcoin selling opportunities.
Okay, we'll keep watching that. But in the meantime, let's turn to earnings because we're right in the middle of earnings season. It was a big week. We've seen Microsoft, Meta, Tesla, Apple all reported. Any big takeaways or anything that you really noticed throughout these earnings reports we're seeing so far?
Yeah, we're focused on the big tech earnings because that's been driving the U.S. stock markets over the last couple of years. And so far, between the four that I mentioned, we've seen a mixed bag. Microsoft reported the results were good, but capital expenditures were a lot higher than expected. So we saw a pullback on price there, about 13%. Tesla as well, the sales of their cars had slowed down and they've discontinued their Model S, X, and X. And that's weighed down on investors as well. But on the flip side, we've seen Meta do quite well, and Apple recorded highest iPhone sales in history. So good potential there.
And Alphabet, of course, reporting tonight after the close. What are you watching for when you see this report come out?
Yeah, Alphabet. Well, first we believe the earnings will be quite good. But it will be the outlook on the AI monetization, in particular their Gemini product, which is their AI kind of large language model that provides you a research engine that enhances what Google used to do in the past. And if there's ways that they can monetize that going forward, then that's what we're looking for. And then we can see a good pop in the stock there.
Okay, so we've got a couple of stock picks to go through. I know we were just talking about Microsoft, but you like Microsoft, obviously.
Yeah, we see that it was oversold. Granted, yes, capital expenditure was higher in the quarter than the forecast had predicted. And also free cash flow came down. It's not negative, but it came down. That means, and as we know, Microsoft has committed so much future spending on the AI build-out. That means if you don't have the free cash flow to commit to the spending, you have to borrow. And when you borrow, then insolvency ratios come into play. Revenues will potentially decrease because your borrowing costs. But the way we look at it is it was temporary. Yes, expenditure was a little bit higher than forecasted, but sales in their Azure cloud computing platform could have been even better if they had put all their GPUs, their graphic processing unit chips, towards that division, but they did not. They strategically aligned some towards their Microsoft 365 Copilot, which is their AI-powered assistant program based on their product. So when you subscribe to it, you get enhanced Word, PowerPoint, and Excel functions. So they put some of the GPUs there. And they're starting to see an uptick in subscribers there. So they're starting to monetize the AI vis-a-vis their Microsoft 365 Copilot. So we saw something like 15 million paying subscribers to Copilot out of a pool of about 450 million users of their Microsoft Office product suites. So there's potentially a lot more that they can tap into a revenue source going forward there. And that's why we like the company going forward. And plus, a good buying opportunity now.
And we'll have to be quick with this last one because we're running out of time. But Cenovus Energy is your other pick. I know they've been in the news recently for a worker killed at an oil sands site and another one injured. Does that do anything to the company, really? Obviously, it's unfortunate.
A good example of that, Suncor a few years ago slumped because there was some safety issues around their employees. So that could potentially be a drawback, but it's up today and it's up about 15% year to date. Basically, they took over Meg Energy late last year, and we're starting to see the synergies there in terms of higher production. They also have a few other growth projects. One that completed last year, Narrow Lakes, out of the oil fields or oil sands in Alberta. And one anticipated to come onshore later this year, is the White Rose just outside of Newfoundland there. So this will increase production going forward. And hence, we think Cenovus right now is undervalued and a good buying opportunity.
Okay, that's all the time we have. Tony Sierra, Vice President, Senior Portfolio Manager at Caldwell Securities. Appreciate your time. Thanks so much. Coming up next, Brookfield Asset Management has named a new CEO, ending Bruce Flatt's 2-decade run. We'll take a closer look at that after the break. Brookfield Asset Management has named Connor Teskey Chief Executive Officer, ending Bruce Flatt's 2-decade run. For more on this story, we were joined by Leon Oda of Bloomberg News.
Bruce Flatt now is he remains chair of the board for Brookfield, but he also remains the CEO of Brookfield Corporation, the parent company. Basically, this plan was set in motion around 4 years ago when Brookfield was close to spinning out its asset manager. Brookfield then named Connor the president of Brookfield Asset Management. And Connor Teskey is at 38. He's considered one of the youngest executives to run a company of that size and magnitude. As we know, Brookfield manages over $1 trillion of assets. He basically joined the company in 2012, and he quickly climbed up the ranks. He ran the investment part of Brookfield Renewables until he was named the CEO of that unit in 2020. While he was focusing or tending to investments in Brookfield Renewables, he also came up with the idea for Brookfield to buy a majority stake in Oaktree in 2019. Of course, the deal turned heads in the industry, and it also was a very pivotal moment for Brookfield because it helped propel the asset manager to become one of the world's largest, and it also basically helped them become a key position them to become a key player in the credit space, but also it paved the way for them to enter the insurance race.
So it's the end of an era for Flatt at Brookfield, but as you say, he's not leaving the complex or the conglomerate altogether. What does this mean, though, for Brookfield Asset Management, this change at the top?
So Bruce will remain involved in Brookfield, of course, and he will now basically turn his attention to Brookfield Corp as it undergoes its own transformation because it wants to become an investment-led insurer.
This morning, the company, Brookfield Asset Management, reported earnings, and it did beat estimates on distributable profits. Give us a couple of highlights, if you would.
Yeah, so basically Brookfield said that they reported record earnings. Their distributable earnings, as you mentioned, increased, and it beat the estimates. It was their fundraising for the fourth quarter was a record as well. They gathered around $35 billion, the majority of which came from their credit strategies, but also from their AI infrastructure fund, which was launched in November. Brookfield is becoming a key player in providing capital for the AI infrastructure build-out, and they launched an inaugural fund in November in partnership with NVIDIA and with Kuwait Investment Authority.
That was Bloomberg's Leon Oda. Coming up, shares of Eli Lilly are surging today after the company's fourth quarter results and forecast blew past estimates. We will hear from the CFO when we come back. Shares of Eli Lilly are surging today after the company's fourth quarter results and guidance blew past estimates. Demand for its blockbuster weight loss drugs Zepbound and diabetes treatment Mounjaro driving this outperformance. And earlier, our Bloomberg colleagues caught up with Eli Lilly's CFO, Lucas Montarce, to chat about the quarter.
We released our guide for 2026. 25% is the midpoint of the growth that we expect to see in 2026 is industry-leading growth, and that's a continuation of the momentum that we see as well in 2025. By the way, thinking about the Q4 that we also release the revenue that we deliver in the fourth quarter, we deliver 43% growth. So it's a continuation of that strong momentum getting into 2026. What is driving that is the similar drivers, the key growth products that we have. Of course, the incretin is getting all the attention, but we have a breadth of a portfolio across all our therapeutic areas that will continue to drive that growth into 2026. Thinking about the drivers that you mentioned, we talk about the incretin portfolio both in the US and OUS. You see that the market in the fourth quarter on the anti-obesity space grew 85%, and we actually outpaced that growth in the fourth quarter, and very strong growth as well in type 2 diabetes, 17%. So we continue to drive that growth into 2026. You mentioned as well the introduction of orforglipron. Very excited. We submitted for regulatory approval in the fourth quarter, and we expect to have regulatory action as early as Q2. So expect to see as well our oral pill coming into the market, a very exciting opportunity to expand the market. In addition to that, we are expanding through access as well with the agreement that we have signed with the administration in Medicare that we expect not later than July will provide access to Medicare patients, more than 40 million patients that could benefit to have access to anti-obesity medications as well. So very exciting time, very exciting opportunity ahead of us.
So, Lucas, there's a lot to dig into there. And you mentioned, of course, the breadth of your portfolio. But investors really, really care about the pill at this moment. So I have to ask a little bit more about that. You mentioned that potential 2Q launch. Is there a possibility that this outlook that you gave this morning gets upgraded as we start to see some of the uptake there?
Yeah, it's early days at this time. We just put the guide out there. We have a very thorough process, and we feel good about the guide that we have in place for 2026. It's still very compelling, by the way, 25%. There is no single pharma company growing at this pace. So we feel about good. We can see throughout the year if we see that continue to trend in the positive direction. But at this time, given all the variables that we have, we feel good about the guide that we have in place.
And so let's talk about the timeline a little bit more here. You and I spoke a few weeks ago at the JP Morgan Healthcare Conference. You said that you're on track for that second quarter approval. You reiterated that timeline today, of course, pending FDA approval. Let's talk a little bit about the FDA. There's been some challenges there. There's been some turnover. Do you see that potentially impacting the timeline at all?
At this time, we are engaging with the FDA, and we feel good about the progress. And so the time that I covered in JP Morgan that you alluded is still consistent with our expectation that we expect to see regulatory action as early as Q2.
All right. Well, we're almost in the second quarter, so we'll keep looking for updates there. I want to talk about pricing as well, because you take a look at this headline, you see global pricing declines in the low to mid-teens. This caught my eye because, of course, Novo Nordisk came out with that early release yesterday, and then they said on their earnings call this morning that they're facing unprecedented pricing pressure this year. So talk us through that, what that means for Eli Lilly and how you plan to make that up.
Yeah, well, actually, the guide, 25%, is encompassing as well the price step up or step down that we have in 2026. So that's included in our guide for 2026 already. When you think about the variables, they are all actually out there. We talk about the agreement with the administration. Those prices are public. We talk about direct to patient that we adjust the price by $50 across all our presentations. That's actually already implemented in the marketplace as of last December. And then we have the Medicare access that, again, we have a price of $245. That's also public price, public information out there as well. So those variables are out there. There is no news from my perspective in terms of the pricing dynamics. It's still going to be a price erosion versus last year. That's included in our guide. Very strong volume growth that we expect to see that will more than offset that to get to that 25% that we have in our guide.
Well, that dynamic is really interesting between pricing and volume. Another line in your earnings release that caught my eye was that you take a look at U.S. revenue. It increased 43%. That was driven by a 50% increase in volume, but it was partially offset by that 7% decrease due to those lower realized prices. So is the hope that, you think about some of the things in the pipeline, the pill being one of them, is the hope that that's going to help expand the market and thus expand volume as you see that price erosion?
Yeah, that's very important. As you mentioned, again, when you think about the volume growth and the volume opportunity, in particular, starting with both obesity and type 2 diabetes, we have a large opportunity. Both segments are really large, in particular anti-obesity medications. We are talking about more than 100 million patients in the US that we can serve. And then globally, there is another 900 million patients that we can serve as well. Nowadays, we are serving low single digits, so the penetration is low, so there is a big opportunity to continue to drive that growth. The fourth quarter, I mentioned that the market in the US grew 85%. So there is a very big runway to continue to drive growth into the future. That's reflected on our volume growth expectation for 2026.
And you touched on this a little bit, Lucas, but I do want to talk a little bit more about MFN pricing there. What impact would you expect that to have on your weight loss sales this year?
So the impact is included in that guide that I talk about, again, the low to mid-teens in price erosion. That's reflected in that price guide that we have for the year. And the prices, as I mentioned, are public. The $245 for the government segment and the public prices that we have in direct to patients, including the adjustment that we did for $50. So all these public prices. We have been very disciplined on our pricing strategy. You can look at the results quarter on quarter that we maintain that discipline throughout 2025. And my commitment is to maintain that price discipline getting into 2026 as well.
All right, fair enough. And I should bring up Medicare access as well, because expanding Medicare access, that is certainly top of mind for investors. And I'd love to hear from your perspective. How do you see that wider access impacting the market? And again, when it comes to the pill, would you expect that to be available to Medicare patients at launch?
That's a great point. Of course, again, not only tirzepatide, again, Zepbound, but also orforglipron will be available in the Medicare segment once that access is provided. So both molecules will have access to Medicare patients, and the patients will pay, actually $50 will be the copay that the patients will be paying for both medicines. So great opportunity to drive access. I mentioned 40 million patients. As always, penetrations will build over time. So starting of July, hopefully we will see that penetration growing over time. So that will build not only in 2026, but also getting into 2027 as well.
And Lucas, before I let you go, one thing that has changed since you and I spoke a couple of weeks ago back in January is that your Zepbound KwikPen, it actually won approval last month. As I understand it, that product is tied to your deal that you have with the Trump administration. So talk us through the rollout here. Do you plan to make KwikPen available to all patients, or would it only be an option for those Medicare patients?
Yeah, it's great news, by the way. I'm glad that you brought it up, because you asked me about the KwikPen approval. And again, it has been 3 weeks, and now we have the KwikPen approval, and we're planning to bring it to the market within the next 30 days. So that will bring another option. Of course, again, we are discussing about the channel segments. You mentioned Medicare being one of them, but also we will bring it in direct to patients. So that we will have more broad access is another opportunity, another option for patients that will have the opportunity to get to the KwikPen device. By the way, the KwikPen device is one that we have available in many countries globally with great acceptance as well.
All right, Lucas, thank you so much. I know it's a busy morning, so really appreciate you taking the time for us.
That was Eli Lilly's CFO, Lucas Montarce. Well, coming up, we will speak with the CEO of Edmonton-based Aurora Cannabis as the company waits to see whether the U.S. will ease regulations for medical cannabis. Stay with us. That's next. Aurora Cannabis posted record revenue in its global medical cannabis segment, up 12% since the same time last year. And this comes as the company wants to see whether the U.S. will ease regulations on medical cannabis after U.S. President Donald Trump signed an order for it to be reclassified. So joining us now is Aurora's CEO, Miguel Martins. Good to have you, sir. Thanks so much for taking the time.
Thanks for having us.
So, okay, first off, you saw most growth, correct me if I'm wrong, in the medical cannabis market. So just to start, where in the latest quarter did you see that growth, geography speaking, and what drove it?
Yeah, as you mentioned, it was a great quarter, record earnings. We had really strong EBITDA. And in terms of international growth, Aurora operates in 12 countries. We have leadership positions in Canada, Germany, Poland, UK, and Australia. And those are the primary countries that we focus on today. But there are emerging countries like Switzerland and Austria, Spain and Italy. And so the movement around legalization of medical cannabis is definitely a strong one internationally.
Consumer cannabis, though, not exactly the same story. Like, what are you seeing when it comes to consumer cannabis, particularly in Canada?
So in Canada, consumer cannabis, is a real challenge. Both the margins and the overall sort of profile of it really does not work well for a company like Aurora. Today we announced further focus on international cannabis, much stronger margins, much stronger growth, and a real feature around science and genetics that you see in those regulated markets as opposed to the consumer market.
Yeah, because you say in Q4 of 2026, the company will be exiting certain markets when it comes to consumer cannabis in Canada. Do you ever plan to exit completely from Canada when it comes to the consumer cannabis side?
Well, this has been a project over time. Over the past 2 years, we've definitely featured more and more of that high margin, high growth business. Today, what we announced is that we're really going to further that and only focus on a couple of markets. If it so turns out that those few remaining markets don't make sense, we'll make that adjustment. But by the same token, if things were to change, it also gives us the option to go back into it.
All right, let's get back to the reportings that came out today. You've also established an at-the-market share offering program. Can you tell us more about this program?
Yeah, it's a great piece of news for the company. The company is one of the strongest balance sheets in the cannabis industry with no debt on the cannabis business and over 150 million in cash. But today we announced an ATM or at the market offering that will give us the opportunities to be even more opportunistic as we focus on internal investments, which we've made to great success, and also potential M&A that would be accretive. We're looking at that to really bolster our ability to take advantage of this growing market.
Interesting. So let's get to the other part of this, which is the potential reclassification of cannabis in the U.S. If this goes through, let's just talk about, first of all, how this would actually affect your business.
Well, we've been saying that all along that for the U.S. to move towards legalization, it would be medical first. And as a global leader in medical cannabis and a company that's been in for over a decade, we've navigated strict regulatory regimes, both Canada and Europe and other countries. The U.S. announcement's exactly what we thought it would be, which is a focus on the medical aspects of it first, not on the rec side. And what the administration has announced is a move from Schedule 1 to Schedule 3. Now, it's early days, and as a company that trades on the NASDAQ, until it is federal legal, we can't get there. But this is a positive development for a company like Aurora that has leadership around the world in medical cannabis. And as that opens up, we'll be in a strong position to take advantage of it.
Would it be, I'm not sure how it would work. Would it be consumers paying out of pocket if they have a prescription, or would it be insurance companies? Do you know yet how that would actually work?
We haven't seen the details, but, when you look around the world, it is both a, self-payer and a reimbursed market. In Canada and other parts of the world, it is part of the insurance program and is reimbursed in many ways, including with the veteran program, here in Canada. And so we'd have to. We've also been encouraged by the administration's focus on research that would open that up for a broader reimbursed model like we see around the world. And again, companies like Canada, Aurora in Canada have navigated that, so we'd have experience in working with it.
Okay, we've got a bit of a shaky signal there. You're freezing a little bit, so I missed part of that answer. So just in case you didn't answer that part, when it comes to who the main customer would be for medical cannabis in the U.S., do you have any idea based on data who that would be?
Yeah, it would be, similar to what we see in Canada. So both on a self-payer and a reimbursed model, we see a variety of patients accessing medical cannabis as part of their insurance and working with their practitioners. And as the research continues, we see the breadth of those applications continuing.
And in terms of a timeline for regulatory changes, obviously these things don't happen overnight, but I'm not sure how long you think it would take to see this in the U.S. Would it maybe be by the end of this year?
It's hard to say, but I think, the U.S. is just one component. We're seeing comprehensive changes to medical cannabis in large, countries around the world, and we've been able to take advantage of that. So we've been adaptable and very opportunistic as it pertains to that. And as the U.S. evolves, we'll definitely, be able to play. Timing is hard to say at this juncture.
And just lastly, like how much of your focus would be on the U.S. if this was to open up there, like more of a market in the U.S.? Because correct me if I'm wrong, your largest international medical cannabis market right now is Australia.
Yeah, that's correct. I mean, the great news is all of the work that we do in the regulated production, development, and delivery of these medical products around the world is the same thing that we would do in the U.S. And so as we grow those markets, like you mentioned, Australia, our largest, all of that work is directly applicable to the U.S. So it doesn't require a new investment or changes. We can just take that decade-plus learnings and apply it to the big market, which is the U.S.
Okay, interesting stuff. We'll leave it there. Appreciate you joining us, though. Thanks so much.
Thank you so much. We really appreciate it.
Thank you. That was Miguel Martin, CEO of Aurora Cannabis. Coming up after the break, the world's largest restaurant company reported its latest results as well, and we'll bring you that right after this. Stay with us. Yum Brands reported mixed fourth quarter results with strengths at Taco Bell and KFC offset by continued weakness at Pizza Hut. Same-store sales beat expectations as diners lean toward value meals, although adjusted earnings came in slightly below forecasts. Let's get more on this from Danilo Gargiulo, senior analyst of U.S. restaurants at Bernstein. It's good to have you. Thanks so much for taking the time.
Likewise. Good morning, Lindsay.
So if we are digging into some of these numbers, Taco Bell U.S. earnings made up 36% of Yum Brands operating profits. I'm wondering how that compared to like the Canada side of things.
So Taco Bell is definitely on the positive side of the equation for Yum, specifically because their same-store sales continue to grow at about 7%, which is essentially showing that the brand is firing from all cylinders. The increased amount of innovation that they've had in 2025 is likely to continue in 2026. And I would say that even the partnerships that they've had over the past year are likely going to be ramping up in 2026. So management feels extremely confident that the trajectory that they've set with average unit volume eventually growing to $3 million is fairly achievable for that brand.
Obviously, there's a number of brands underneath the Yum brand, including KFC. So we'll talk about that next. There's strength in KFC's international business, apparently. What's driving that strength?
Yeah, I will say that international business, the story for KFC is about penetrating in countries where KFC has more limited presence. In fact, if you decompose the strength of KFC, they essentially had a 4% system-wide sales growth, excluding the FX, of which 3% was same-store sales and about 6% in unit, which means that the real engine is on the development side for KFC. So I think the core focus for the brand is going to be how can they continue to unlock cash-on-cash returns and higher ROI for their franchisees as they continue to their mission to grow the KFC brand internationally as well.
Do we know why KFC is doing so well internationally? Like maybe Pizza Hut or Taco Bell are not expanding as much internationally as KFC, but like what's some of the reasons behind that, or where exactly KFC is doing well?
Yeah, I think first of all, the stores of KFC are newer in international markets. So they tend to have a better setup because purely from a marketing and imaging standpoint for consumers, they tend to be standing out versus competition. Secondly, I think the innovation and the price point that they brought up in international markets has been, fairly compelling. And on top of it, the chicken category has been growing globally. In the US, the situation was a little bit more compressed because the amount of competition in the chicken space has been more elevated in the past years. KFC probably underinvested in their menu innovation and in partnerships and in elevating their brand. And therefore, you can see dichotomy of performance if you decompose KFC between United States and international markets.
Interesting. Okay, let's talk about the chicken market a little bit more then, because as you mentioned, like demand for chicken is going up apparently because of soaring beef prices. Is that what you're talking about? Like you're seeing more demand for meals that have chicken in them instead?
That's a great question. So in the near term, absolutely, you're right. There is more elevated offering on chicken platform, specifically because inflation in the beef category has been more elevated. And so to contain their cost, operators are trying to divert consumer demand into more chicken offering. But I would say, besides the short term, on a longer term basis, we've seen the CAGR of the chicken category in the United States being double digit almost over the past decade. And that's because the chicken category is more portable, so it's better from a delivery standpoint. It's considered to be healthier, which is a long-term trend in the United States consumption. And finally, it's more prone for innovation because the category, the protein itself, is fairly neutral as a flavor. And so you can include some more dips, sauces, or different ways of cooking the chicken. And that provides incremental innovation that attracts new consumers into the category.
Interesting. Okay, so let's go back to some of the other brands, because Pizza Hut is another one that we're watching, right? And a little bit of weakness in terms of where Pizza Hut's sitting. Why is that?
Yeah, so Pizza Hut, in general, I would say the category of pizza is a challenge category. It has always been growing relatively small. Pizza Hut as a formidable competitor in Domino's, who has been able over the past decade plus to be offering a very attractive price point that other competitors have been unable to match. And so Pizza Hut historically was known for a full service restaurant, dining in the restaurant. They had a real estate right now that is still not compatible to where the future growth of the demand is coming from, which is mostly off-premise consumption. So the real estate of Pizza Hut doesn't allow them necessarily to be growing as fast as their competitors. Some of the capabilities that competitors have been unlocking over time are fairly behind on Pizza Hut, which is explaining why they kept losing market share over the past decade.
I wonder then what, obviously maybe you don't know either, but what the future for Pizza Hut is if it continues to kind of lose steam.
Yeah, I mean, management has been discussing strategic options for Pizza Hut with a near-term focus of trying to restore the profitability to the extent possible, including having some support from a marketing standpoint and closing some of the unprofitable stores in the United States, about 250 stores closures planned by management. So clearly the focus needs to be on maintaining profitability of franchisees, making sure that the brand is at their possible, the best possible shape before a potential, spin-off or potential sale of the asset.
Interesting stuff. Okay, we'll have to leave it there, but really appreciate your time today. Thanks so much.
Of course. Thank you very much.
That was Danilo Gargiulo, Senior Analyst of U.S. Restaurants at Bernstein. Still ahead, shares of Novo Nordisk are plunging today after the company shocked investors by forecasting a steep decline in sales. We'll hear from that CEO next. As we mentioned, Eli Lilly surging today after the company's guidance blew past estimates. Its competitor, Novo Nordisk, however, painted a different picture, forecasting a steep decline in sales. Our Bloomberg colleague spoke with Novo Nordisk's CEO, Mike Dustar, for more on that.
We have been speaking to the investors, trying to explain that in order to expand market, and we need to expand market in our business, we need to reduce the prices. So we increase affordability. Of course, it was well publicized that in the US, the prices from a very high level were coming down within the GLP-1. Our company is quite concentrated compared to many other pharma companies within the GLP-1 segment. So when you, of course, get a pricing headwind on your GLP-1 products, Wegovy and Ozempic, you feel the pressure of that more. But also on the back of course, being a focused company and being the best in what we do, we feel very confident that the volume buildup will happen script by script, and we have seen the early signals of that with our Wegovy pill launch. So I'm very hopeful that while we're disappointing the investors today on a short-term price decrease, they will be quite happy to see that we will be able to obtain a lot of gain from the volumes that entails within diabetes and obesity.
So you're basically saying, look, trust us until this happens, right? Until the volume uptake makes up for the price decreases. When? Is it this year? Give us a timeline of when you think you'll see that turn.
I think what most people would recognize with diabetes and obesity, this is a condition that unfortunately affects billions of people. Close to 2 billion people have diabetes, obesity, and overweight. Everyone also knows that together with our competitor, we are only treating some 20 million of these billions of people. Everyone notices that GLP-1 market as a segment is growing, and we have been able to actually show that we can take part of that growth. This year we'll be growing once again, and we'll be producing more than ever before, treating more patients than ever before. But of course, when your base gets repriced in the United States and US is some 55% of our business, you will basically see the headwind and the result of that within 2026. I am much, much more hopeful as we pass through this period that the volumes will compensate for the price decrease that you've seen.
I mean, given where we are now, can you rule out another round of layoffs?
We don't have any plans of mass layoffs, but I also tell our own employees as well as the external world that we are readjusting our business as we go forward. And as a result of that, in pockets of the company, we will be hiring more. I think right now, currently, we have some 400 open positions, but there are other parts of the business where we are reducing our capabilities. So that's business as usual. What you saw last year with 9,000 employee cuts is not in the plan for 2026. And as long as we grow and make more patients into our products, come into our products, then of course it's more of an upside than a downside when it comes to headcounts.
And this would be for the whole year. So you're basically ruling that off, even if the uptake in volumes could take longer than expected.
I am right now looking at the first early signs of volume uptake. That's our Wegovy pill that after 4 weeks has been given to 170,000 individuals. If you put that in the context, that's 2 times more than tirzepatide did in their first month of launch, or 15 times more than when we brought Wegovy injectable. When I see volume uptakes like that, I get encouraged about the longer-term future.
I mean, do you worry that the oral Wegovy could cannibalize the Wegovy injection?
The early signals are that some 88% of the patients that are coming into Wegovy pill are buying the lowest dose, the 1.5 milligram of the product. That's a very strong signal to us that these are new patients and not those who are coming from the injectable ones. There could be some small cannibalizations, people who need, to take a pill instead of an injection. But I would say a lot of people have been waiting to use GLP-1s, but injectable was not the path they wanted to take. Wegovy pill gives them the same efficacy as the injectable Wegovy at 16.6% weight loss. So we're seeing a very good uptake of these new people coming in.
Do you feel confident that Novo can compete in the long term, in the long run, without a monthly obesity shot?
Absolutely. First of all, we do have monthly products in our pipeline, and we will share and show that in due course. But more importantly, I feel that Novo Nordisk, by being a focused company, probably has the best pipeline right now in the industry. And we also have manufacturing skills second to none. 2 things that many of the new players coming into this market sometimes underestimate. And then we have the commercial capabilities, and we are very quickly learning how to mass product these GLP-1s via our partners. So I feel very confident for the building blocks that Novo Nordisk is building the future.
Mike, I know there's a lot of hope for CagriSema. How confident are you that you'll get the right trials? I think we're expecting something quite soon on that. And how easy would it be then, if you do get the right approvals and the trials go well, to scale it up?
So we have filed for approval, and we hope to get that approval later on this year. That would make the CagriSema launch early next year, and perhaps the first amylin molecule, combined molecule, that will hit the market. So once again, testament to Novo Nordisk's innovation powerhouse that it is within this area. It's a fantastic drug that I'm looking very much forward to, with the highest efficacy than any other product today marketed. So that's, of course, incredibly exciting. And more to that, we will try to make that the best launch again, only surpassing what we've done now with the Wegovy pill.
The federal government is set to release a new auto strategy aimed at boosting Canadian-built vehicles, improving market access, and increasing electric vehicles on the road. CTV's Abigail Beeman has more in this report.
The auto strategy coming this week.
Bringing back incentives for buying EVs was not in the last budget, but heading into cabinet, ministers wouldn't rule it out as part of the new auto strategy.
We'll have more news on that to come.
So it sounds like you're bringing it back.
We'll have more news on that to come.
The auto strategy is being worked on, and these are different conversations we're having.
The industry minister also wouldn't say what will happen to the EV mandate, currently on pause. Sources tell CTV News the new strategy is expected Thursday. Melanie Joly said workers impacted by the loss of the third shift at the GM plant in Oshawa are at the core of new investments.
It's important because we know our auto workers are right now feeling the brunt of the U.S. unjustified and unjustifiable tariffs.
Industry experts say it's not just the uncertainty of American tariffs that hurt, but a lack of information about the deal to allow 49,000 Chinese EVs into the market, made during the Prime Minister's trip to Beijing.
So we don't know what the parameters of that are, the guardrails around that are. So as opposed to more uncertainty, we need an auto strategy that provides certainty.
And industry hopes something to boost demand after a focus on supply.
The government have not done enough on the demand side. So on the demand side, we actually went backward.
Incentives are important because today the current regime is to mandate the production side of it and to punish producers who don't achieve a certain percentage.
Industry experts predict big changes coming to the EV mandate when the new auto strategy is rolled out, and are hoping it will allow industry to target Canadian demand after being hammered by White House tariffs.
That was CTV's Abigail Beeman. Market Call is coming up next, and today on the show we have Cole Katcher. He is Senior Investment Advisor and Portfolio Manager at Wellington Altus Private Wealth, and we'll be taking your questions on North American stocks and ETFs. And thanks for watching Morning Markets. We'll see you tomorrow.